Hello, my name is AMIR AZMY, and today I want to present about company background of Amlex, Turiya and VisDynamics. Amlex Holdings Berhad is an investment holding company based in Penang, Malaysia. It focuses on providing electronic packaging and interconnect solutions for the semiconductor and electronic industries. Its main subsidiary, Amlex Technology ZUNNURAIN Berhad, specializes in precision mechanical and mechanical components, including stamping, molding, and electroplating. Amlex serves industries like automotive, healthcare, consumer electronics, and telecommunication. The company uses modern machinery for high-precision manufacturing, is expanding globally, especially in the semiconductor and electronic sector. Next, we move to Turiya. Turiya Berhad, established in 1961 as C-Type ZUNNURAIN Berhad, is based in Kuala Lumpur, Malaysia. Listed on Bursa Malaysia in 1984. The company has diversified from its early focus on commodities and building material into industrial gases, chemical, and semiconductor. Key milestones included the 2003 acquisition of Pyramid Manufacturing Industries and the 2009 purchase of Wisma Chase Perdana for property investment. And finally, VisDynamics Holdings Berhad is founded in 2005 in Malacca, Malaysia. It specializes in automated test equipment for the semiconductor industry, with a focus on R&D and innovative solutions. Its key subsidiary, VisDynamics Research ZUNNURAIN Berhad, provide advanced testing and assembly system, positioning the company as a leader in the Malaysia growing semiconductor market. With nearly 110 skilled employees, the company is strategically positioned for growth within Malaysia's expanding semiconductor industry.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad DANISH HAMILI and I will present the next slides. Starting with Amlex, the financial position indicate a mix of strength and potential area of concern. First, current asset. This show an initial upward trend rising from 0.39 to 0.56, demonstrating improved liquidity. However, a slight decline to 0.48 in the final period suggests a potential drop in liquidity that warrants closer examination. Next, current liability. This liability peaked at 0.34 but decreased significantly to 0.22, reflecting better management of short-term obligation. Lastly is long-term debt. Although relatively stable initially, it increased from 0.11 to 0.18 in the final period. This suggests strategic borrowing or restructuring effort. In summary, while Amlex financial position show improved short-term liquidity and reduced liability, the growth in long-term debt and slight decline in current asset highlight area for future scrutiny. Next, we go on to the Amlex company analysis with its financial performance. The financial performance of Amlex reversed significant fluctuation. First, cost of goods sold (COGS). COGS rose steadily from 100% to 101.22%, indicating increased production costs before dropping sharply to negative 176.57%, possibly due to reduced sale or operational change. Next, total operating expenses. This rose to 89.92% before declining dramatically to negative 1.264%, potentially reflecting cost-cutting measure or efficiency improvement. Net income. This metric exhibited extreme volatility, starting at 100%, dropping to negative 905.20%, and then rebounding to 4,843.11% before stabilizing at 1,195.75%. This indicates a challenging period followed by a market recovery. Overall, while Amlex faces significant financial challenge, its strong recovery in later period suggests successful strategic adjustment. For the next slide, we go to the Turiya company analysis. First, financial position. We look at Turiya financial position, which highlight both improvement and concern. First, current asset. Starting at a low 0.04, this increased to 0.08 before settling at 0.07, indicating short-term financial improvement with some fluctuation. Next, current liability. This steadily declined from 0.08 to 0.03, showing improved control over short-term obligation. And lastly is long-term debt. This decreased from 0.23 to 0.1 times, reflecting effort in repayment or reduced borrowing. While Turiya show ancient liquidity and decreasing liability, its low level of current asset rising concern about short-term financial flexibility. Next, we go into the Turiya financial performance. Turiya financial performance reflect ongoing challenge. First, let's go to the cost of goods sold (COGS). COGS rose from 96.19% to 148.55%, significantly increasing production costs. Total operating expenses, this increased from 107.47% to 128.21%, reflecting rising operational costs. Net income consistently negative. This declined further from negative 54.24% to negative 102.57%, highlighting deepening losses. This data underscore Turiya's struggle with cost management and revenue generation, pointing to an urgent need for financial and operational restructuring.
Next, we're going to talk about the financial position of the VisDynamics company. So, starting with the current asset, it started with 0.85 but declined until 2021. A year later, it increased slightly but soon dropped. This could be interpreted as the company may experience fluctuation in cash or other current asset due to the differences in cash inflow or outflow. As for current liabilities, from 2018 to 2022, it remained constant, but a year later it dropped significantly to 0.08. The reason for this can be explained with the reduction of accounts payable due to the company has decreased its credit terms. For long-term debt, the firm didn't show any measures in 5 years, with only a very minor increase in 2021. This can be said that the firm may prefer to finance its operations through short-term debt instead of long-term debt. Moving on, cost of goods sold. It began with 100% but dropped to 72.91%. A year later, it increased to 170.63%. Unfortunately, within the last 2 years, it dropped significantly from negative 122 to negative 65.31%. This may be interpreted as the firm experienced significant reduction in sales or production output because of changes in demand. Moving on to total operating expenses, begin with 100% and within 4 years, it increased to 123.48%. The best way to interpret this continuous growth is because the firm is growing, so does the operating expenses to support its continuous operations, such as staff expenses too will increase. For example, salaries, wages, and benefits. Moving on, net income. It showed major rises within the first 4 years from 100% to 2,507.92%. But in the previous year, in the next year, it decreased majorly to 559.35%. For the continuous growth, it can be said that the growth of the growth of revenue due to expansion into new market. As for the major drop, the best way to explain is that a sharp rise in operating expenses.
This chart tracks MLEX financial health using the Altman Z score. Score below 1.8 indicate high bankruptcy risk. In 2019 and 2020, MLEX was in the gray zone. However, in 2021, the Z score has surged, placing MLEX in a safe zone with minimal bankruptcy risk. This trend continued in 2020 with a significant increase, while the score dipped slightly in 2023. It still remained within the safe zones, suggesting a strong financial position for MLEX. Assalamualaikum. My name is NABIL bin NAZRI. So for today, we are analyzing Amlex financial health using the Altman Z score, a bankruptcy predictor. It's considered 5 financial ratio score below 1.81, signal in high risk. In 2019, Amlex has a moderate risk Z score of 1.97. This improved in 2020 and 2021. However, since 2022, the Z score has significantly increased, placing MLEX in the safe zone with a very low bankruptcy risk. This indicates MLEX has taken steps to improve its financial health. However,
continuous monitoring is crucial. This line chart tracks Turiya financial health using the Upman Z score. A score below 1.81 indicates high risk bankruptcy. From 2019 to 2022, Turiya faced significant financial distress, with Z score consistently below the threshold. However, in 2023, the Z score surged above 1.81, entering the safe zone, suggesting reduced risk of bankruptcy for Turiya. This table analyzes the financial health of Turiya company using the Altman Z-score model. The Z-score is calculated using 5 financial ratios: capital to total asset, retained earning to total asset, EBIT to total asset, market capitalization to total liabilities, and sales to total asset. The Z-score below 1.81 indicates high bankruptcy risk. From 2019 to 2022, Turiya Z-score remained below this threshold, suggesting a high risk of financial distress. However, in 2023, a significant improvement occurred. The Z-score rose above 1.81, entering the safe zone, indicating a reduced risk of bankruptcy.
Hi, Assalamualaikum and good day everyone. My name is Muhammad ISKANDAR ZUNNURAIN bin FAIZAL, and today I will be presenting the Z-score of VisDynamics Berhad. The Z-score is calculated using 5 key financial ratios. First one, working capital divided by total assets. Second, retained earnings divided by total assets. Third, earning before income tax divided by total assets. 4, market capitalization divided by total liabilities. And 5, sales divided by total assets. A higher Z-score indicates a lower risk of financial distress. So, as shown in the chart, the blue line represents the Z-score of VisDynamics Holdings Berhad across the 5 years, while the red line indicates the distress zone. Throughout the 5 years, the company consistently stayed in safe zone, indicating robust financial management, strong profitability, and a very low risk of financial distress. In summary, VisDynamics Holdings Berhad has demonstrated a steady improvement in financial health, especially in 2023, reflecting its resilience and strong fundamentals. This trend signals the company's ability to sustain its operations and growth in the foreseeable future. And that is all from me. Thank you.
Next, we will go to the recommendation. We will identify their improvement areas and decide on the best investment. Amlex Holdings Berhad has shown resilience but faced challenges like declining current areas and rising long-term debt. Stabilizing these areas, focusing on consistent revenue growth, and improving cost management are key to its future success. Next is Turiya. Turiya Berhad has struggled with rising costs and losses, although 2023 showed improvement. To sustain this progress, the company needs to enhance efficiently, increase current asset, and restructure operations strategically. And lastly is VisDynamics Holdings. VisDynamics has maintained strong financial stability and low bankruptcy risk. By expanding into new markets and investing in R&D, it can continue to grow and lead in the semiconductor industry. So, for the investment recommendation, VisDynamics is the best investment choice due to its financial strength, consistent performance, and growth potential, while Amlex and Turiya have improvement opportunities. VisDynamics stand out for its stability and conclusion. VisDynamics Holdings Berhad emerged as the most stable and promising investment, showing strong financial health and strategic positioning in the semiconductor industry. Amlex Holdings Berhad has shown resilience but continues to experience fluctuation in its financial performance. While it has potential, investors should proceed with caution and monitor its progress closely. On the other hand, Turiya Berhad is currently facing financial struggle and operational inefficiencies, making it a high-risk investment. It needs complete restructuring before it can be considered a viable option. For overall, VisDynamics is the best investment choice among the three, with Amlex showing promise and Turiya recording significant change. Thank you and goodbye.